Stock futures opened lower Tuesday evening after another wild ride on Wall Street. With inflation running at a 4-decade high, investors have been pricing in a more aggressive Fed. Over the past few months, the Fed has signaled it will likely begin raising interest rates in March from the current near-zero level. The Fed is also considering rolling assets off its balance sheet, so the volatile market is trying to calibrate correctly the scale and magnitude of the Fed pivot. As of Tuesday, the S&P 500's loss marks its weakest start since 2008, and the NASDAQ hasn't seen a start this bad since 1972. Currently, about 61% of S&P 500 stocks are more than 10% below their 52-week highs, and 24% are in a relative bear market, meaning a drop of over 20%. Although I'm not going to go full Jim Cramer on you, it may be time to stick your toes in the water and buy some of the more attractive stocks that you may have been following. This may not make sense for short-term buying, but for those of you who have an investment horizon beyond 6 to 12 months or so, buying attractive stocks at these levels may be opportune. On this channel, we don't profess to pick the tops or bottoms of the market. We just want to remove as much risk as we can for the long-term investor. So, before you buy, let's take a look at the charts and get an idea of the potential risks. And so we'll start off here with the 20-year monthly chart on spiders, the SPY, and the close on Tuesday was 434.47. Now, in the system, you start out with the monthly. Take a look at the monthly chart and all the oscillators, and if things look good, you move to the weekly chart. And if the weekly charts look good, then you move to the daily chart to pick your spot. Now, here from 2009 all the way through to the current time frame, we've had a pretty good run. But as you can see here in the price chart, it looks like we may have a rolling over process at that point there. We're down here to this level here, so a pretty sharp drop. Moving into the volume, not going to show us too much, but here in the MAC, this is the main concern in the monthly chart. Is this topping process definitely looks to be into full swing, perhaps. Now, the fast line is still above the slow line. Fast line being in black is still above the red slow line, so anything can happen. If the fast line does pierce through the slow line, then you want to put the brakes on. Now, moving on down into the histogram, you can see the same thing. We definitely have been slowing down for the last several months. A definite topping process moving through here. Into the price rate of change, you can see pretty much the same thing as well as in RSI, and into the stochastics as well as the Williams. Now, moving back up here, back to the RSI, one of the indications of a weakening market is, say, a top there, but with a lower top here, giving this divergence moving on down while the market continues on up. You could even look at this point here from, say, late 2017, 2018, and see a declining pattern there. Now, I'm not sure how much water that holds, but definitely you get the idea that there are these oscillators that are showing weakness, with this MACD here showing the biggest red flag. On up here to the price chart, one last look. Okay, so you do have some cautionary flags here, but let's go ahead to the weekly chart and see what that shows. And so the process moves to the weekly chart, and we're using a 3-year weekly chart. You can use a 2-year, 3-year, 4, 5, whatever you want. And you just simply run the same test. Now, looking at the price chart, say from this point here, moving on up, we had a relatively tight channel with that bottom line there, and then the top line running through here. They're not straight lines, but you get the idea. Now, what happened was at this point here, we didn't quite reach it to that top channel line, and we started rolling over, and down we went. And we pierced right through the 20 and the 50 EMAs. So that's definitely a red flag. But are we down to the point that perhaps we'll get a rebound? Well, we'll see. Moving on down here, again, volume's not going to show too much. And the MAC, we see that the fast line had come through back here in this November time frame, and the fast line stayed below the slow line. With this overall move here, you can see this topping process moving through like that. The fast line came up, got reflected back, and then has had a hard week or two. And you can see us heading on down pretty quickly. We don't see any stop or any slowdown in the move yet, but I think we will. Here into the histogram, you can see that it's accelerating almost down to -5. So it's much worse than most any other circumstance here, except for, of course, early 2020 at that level here. I don't think we're going to go down that far. It's possible, but I don't think that's in the cards. So hopefully it stays here somewhere near that -5. Moving on down into the price rate of change, pretty much the same thing. Although it's not a rolling over, you do see the price rate of change shows a slight decline moving on through here. So every once in a while you get a break, such as we're having right now. And this fast line moved down and it's below the zero line, but it's still close enough to that zero line, so there's still enough power left in there. And then the relative strength index, we're at a moderate 33.00. I would say a moderate weak 33. We're definitely down here. Once again, the worst point was, of course, this in early 2020, where that sell-off was pretty hard. Now, we've had a pretty hard sell-off here, but only about a week or two. So I don't think that this is going to get down as low as we did in early 2020. We'll keep watching, but I think we're starting to test the bottom now. Into the stochastics, pretty much the same thing. Pretty much a free fall. You can see that the slow line is way up there and the fast line down here under that 50 or mid line. And the same thing here with the Williams. Now, looking closely at the Williams, we're all the way down here. We have that bounce off of that -100. And if you look back, we had a bounce off the -100 here in early 2020. And then back here in this time frame in, say, mid-2019 as well. So those are pretty good points. Is this going to be the only time we test that -100? I'm not sure if I would bet on that, but I think the odds are in that favor. Moving up to the price chart, one last look at this before we go to the daily chart. And then the last step in the process to take a look at the daily chart, and this is the 6-month daily on the spiders. And as you can see here, this particular level has gone well below the level we were at, say, in late September into October. And of course, that bottom and basing took several weeks. This sell-off here from that point was pretty hard. This would be a waterfall sell-off all the way down here, a very hard bounce up here, and we did try to test that bottom here on Tuesday. It didn't get quite that low, but the market close was still a sell-off from Monday. So from that price chart, let's go down here, and you can see that volume definitely spiked. It is rolling over with a decline here, so we'll see if that decline continues. That's pretty important in this kind of a circumstance. We want to see declining volume. And then here into the MAC, you can see that there's still some acceleration from the slow line there to the fast line here. Still acceleration on the downside below that zero line. Now, you can see also that this top in the fast line there in November versus the top here in early 2022, you can see that things were slowly deteriorating. So a sell-off wasn't necessarily unexpected. Into the histogram, you can see things moving on down here. It's starting to slow down here, but perhaps not slowing down enough. We need to see this sort of stop and then turn up with those bars. into the price rate of change. You had a bit of a test here, not successful, so it continues to head on down, but let's look for a bottoming process someplace in here. You can see that at least by the relative strength, which is at a very weak 16.62, we had that bottom here, and this current level here only slightly better. Into the stochastics, this does look like it's improving, not say unlike this here. I think the bottom of this particular sell-off is going to be sharper than it was back here, but it's always a possibility to have, say, a double bottom here and to take a couple 2 or 3 weeks for a process. So be patient for that. Now here into the Williams, once again, very hard sell-off at this point. We have improved quite a bit since then. So watch that improvement, see if it continues and perhaps starts to form something like this here, where we had this bottom at that level, and then we sort of had a head and shoulders, an upside down head and shoulders there with one shoulder and the other shoulder here. So we have this shoulder there, and then hopefully we can create another shoulder over here before we continue on up. So that's what I'm looking for, and mostly I'm looking for the histogram and the MAC to show at least some slowing down, maybe some sideways movement with this differential between the fast line and the slow line. Because it's so wide, we can still have volatility going forward. I need to see the fast line on the MAC turn bottom and then head up and then cross through that slow line before I actually commit any money. Now, moving up to the price chart, one last look, and this has been a pretty good sell-off. As you can see, let's do some sideways trading before we start moving on up. But for those of you that have been following some particular stocks or mutual funds or whatever, this might be time to start sticking your toes in the water and testing to see what the temperature is. You might be able to begin the process of buying and then stretch it out for a few weeks so that you don't commit all of your money at once, and just see how the market evolves in the coming weeks. And so that's my advice, and that's ChewDog Charts. Thank you.